2020 could best be described as an odd paradoxical year, which is best symbolized by the shape of the alphabet K. Now, the industries which were in the upper part of this K were in an upward swoosh, and the industries or sectors in the downward part of the K were in a downward swoosh. Greetings, my awesome viewers. You are listening and watching Aman Sangha, Independent Financial Advisor in Mississauga, Ontario. For my update, which will be the last for 2020, I will be touching upon three main points. We'll start with the major index returns for the year 2020. Then I'll go on to delve on some of the short-term challenges that lie ahead of us that'll be taking a limelight as we head into 2021. And lastly, I'll be taking a little bit of a higher level approach in highlighting the need or the importance of having a financial plan in place. So let's get started by looking at 2020. Now, I started by saying that it has been paradoxical. It has been paradoxical in the sense that despite a pandemic in place, lockdowns and economies going downwards, the markets have remained surprisingly resilient and posted strong returns across the bonds as well as equities. Gold has had a good performance as well. Probably the only one outlier in this whole asset mix is the energy sector, which was driven down because of the collapse in the demand for oil. Now, this becomes all the more surprising because it has happened on the backdrop of 2019, which had strong returns, and 2020 has kind of replicated that, with NASDAQ being the key driver, largely because the companies of the sectors that have benefited from in the upward part have been the technological sector. Now, I've delved a bit about why is this a paradox in my prior posts, and just to summarize it quickly, there has been an extraordinary fiscal and monetary stimulus by the central bankers as well as the central governments worldwide, and that's seen these market indexes touch all-time highs despite being in the midst of a pandemic. Now, for the short term, it prevented this recession from being a long, drawn-out depression. So it has helped us overcome that short-term challenge, but the long-term implications of these decisions will play out over the next decade. Now, having said that, we are not out of the woods yet. Although we still don't know the long-term implications, there are short-term challenges that still we need to look into and tackle in the best way possible. And the first one is obviously the COVID-19 and the outbreak. So the pandemic is still out there. There has been a rising number of cases, number of deaths. And I know there is a vaccine already in the markets, and then there are more on the way, but it'll take some time before majority of the population over the world can be vaccinated. So in the immediate containment, governments will be looking to probably lockdowns or shutdowns of the entire economy, especially that we're coming out of this busy Christmas or holiday season period. So the impact on 2021 Q1 data might not be that pretty, and we could see those implications in the second half in Q2 of 2021. The second immediate short-term challenge that we've been looking at is the political uncertainty in US. The week of Jan 4th will be critical as we have the Georgia runoffs. And if the Democrats were to win Georgia, they will control the Senate, and which means that it'll be a blue wave, and which it is kind of could be a headwind for the equity markets because you're looking at more regulation, more taxes down the road. So for the short term, there are these. I think of all the things I could mention, these are probably the two things that'll be on the top of my list that I'll be keeping an eye on. Now, lastly, I want to go back to the point about having a financial plan in place. Now, this chart, you could call it a heat map, or you could call it the asset class returns for the last 12 years. And what you could summarize this by saying is that start of a given year, it's extremely unlikely to predict what will be the asset class that will come out on top of the next year. Now, 2020 has been very good for gold, and it has been for China, which means that if you had these positions in your portfolio going into 2020, you'll be sitting pretty happy right now. And now would be a time to rebalance it or to adjust it according to the situations that stand as if, so that make sure that the portfolio is always optimally allocated to the assets which reflect your risk appetite. Now, the second part I want to mention about the asset returns is that investments are one small picture of a financial plan. Now, there are other parts to a financial plan, which includes tax planning, which includes risk management, which includes cash flow planning, as well as estate planning. So you put all these together in one picture and you get the financial planning pyramid, which you would probably wrap it up by putting a financial plan in place. Now, it's hard to say which asset class is going to do well, or what risk an individual or an investor might encounter. But having a plan in place gives you the framework or the compass to navigate these challenges in case a curveball is thrown by life, by economy, or by the financial markets. I'll just wrap this up by saying that 2020 has been a very different year, unlike anything that we've experienced before. And the learnings from this year should definitely help us plan for 2021 and beyond. I want to wish you the best of health and happiness for the coming year, and look forward to seeing you again for my Jan update. Bye for now.